the BTC price. So
Yeah,
like
right
to
on.
say,
Yeah, the shareholder group definitely with capital B and the overlap there with SWC is really fun. I'm sure the energy was palpable.
yeah.
Always on X, I see those guys everywhere, and they're always engaging when I'm talking about capital B and smarter web. So that was cool to watch, and we were able to simulcast that event on X and replay it this week. And also today we've got Sean Bill, legend CIO, and your latest venture is with BSTR. Welcome into the saddle.
Yeah, thank you. Great to be here with you guys. Looking forward to kind of getting a little rundown of what's going on
Yeah,
and giving our
maybe you
opinions
can
on
kick us
things.
off, Sean. Why is price where it's at? I remember I watched. I think it was an interview with CoinDesk you had at the Bitcoin conference where you were talking about 65K, 60K are prices we're going to test again probably with some choppy waters. Walk us through the recent price action and
Yeah,
why you're
let
hopefully
me
bullish.
share. Yeah, I'll share a chart here that I think helps kind of put a visual for folks that are maybe we can talk through it a little bit. So this is a super interesting chart. If you go back to the 4-year cycle, and you look at the '09, the 13, where the cursor is here is the 2017 high, almost spot on here with the 2021 high. So we tapped here, but the high came in right in here in December, November. And then we had the October highs, right, in here at October 25. So it was a pretty interesting setup if you were following along there, because you had, if we switch this to a daily chart, let's just go in there, you had a triple top here, right? You can see where we had the triple top going on up here. And this is, in the hedge fund world, this is a classic sell signal. If you fail, you have a double top, you go for a third attempt and it doesn't break, that's usually top of the market for you. Same thing on a bottom. If you have a triple bottom, it's usually a very solid base to build off of. And so from our perspective at BSTR and what have you, we were watching this very closely. And we were like, okay, we're probably going to open the door for a move down into this support zone. And we do generally want to watch how the symmetry of the markets works, right? So you're looking at channels here, and my background is out of the Chicago Board of Trade. If you look behind me, that's the Board of Trade building with the Genesis block. I kind of put the two together because, it's old and new, and it's kind of TradFi and DeFi, or digital, I guess I should say. So if we look at the chart, and I'm looking at my bigger screen over here, we're looking for kind of symmetrical patterns. And so once you put in a top, you're kind of looking for that what's the first level of support, right? And that's why we have the green lines coming in, because this is the bottom of the channel going off these old lows. So that was the first significant one. And then you have a nice uptrend channel that was coming in. You can see how the market just got stuck on that line for quite a while, battling back and forth, bulls and bears going at it, like who's going to win this game. And then when they snapped it, came right down to the bigger channel. Now there, I thought we would take a pause and things would calm down a little bit. And then we just saw the retail selling just came in and just hammered, right, on the ETFs liquidations and what have you. And in that 2 weeks, we went from, call it, just about 90K down to 61. So I think what's going on right now is we have this kind of this channel trade going on in here, and not unexpected that we would bounce off the low. And what we're doing right now is we're retesting this low. All right, so we're going to see what happens here. Are the bears or the bulls going to remain in control? The bears may try and do a bear trap here where they punch through this low, run the stops. I always like to say, how can the market hurt the most people, right? What can it do to hurt the most people? And if it punches through that low and washes them out of the trade, then you've done the damage, right? So if you look at the selling that's been happening, 26% of the sales in BTC over the last 30 days were people who bought above 90,000, right? So we've had this kind of capitulation here. So I think there's a good chance, my framework, if I'm looking at the market, and of course none of this is market advice, but as I look at the market, I think what's happening here is we're retesting the low. It's pretty common that we do this. If the low holds, then we then create a pretty good foundation for the next move up. So that's how I'm kind of viewing it. I think you're starting to see the liquidations. You're starting to see people wash out. It doesn't mean that we couldn't get an aggressive hedge fund, push through the lows and run the stops, and then they cover into it, and then we get back on our way. If that were to happen, the next big levels that people would be watching would be right in here, around 49,000, this old low. So that would be a pretty severe punch through the bottom channel, and I kind of very very much doubt that we get down that low. You have the 200-week moving average coming in. You have the channel support. You have this old low. It's going to be a full-on battle at that level.
Yeah.
I'll stop sharing there.
Yeah. Let's hope the Bulls win most of those battles down here, Sean. When I think about tracking Bitcoin treasuries and the persistent bid that Michael Saylor's had on this year, almost weekly buys. He hasn't bought a big tranche of Bitcoin for a couple weeks, but he's been able to raise in a Bitcoin bear market so much money, on the back of STRC, packaging the digital credit and buying more Bitcoin. When you think about the coins that he's taking off the market, what does that mean for price action, looking forward? And, does the market need Saylor to keep stepping in like he has been?
Well, I think that even Saylor would agree that the market's bigger than Saylor, right? He was making the comment that he could buy 100, 200 million an hour, and it doesn't really move the price, right? So I think that having Saylor in the market, having other treasury companies in the market is a good thing. It takes supply out of the market. That creates a dynamic for support. But I think what we're seeing right now is I think it's more kind of retail driven, the price action. So those people that were buying above 90,000, primarily retail. Those folks that are in the retail space are chasing after how can they make the best return in the shortest time frame. So their attention, I think, has shifted over to the AI and the chips. You look at the top 25 AI companies or chip companies, whatever you want to call them, tech companies, I guess. That constitutes about 40% of the market cap of the market right now, which is higher than what we had in the 2000.com. So we have like a full-on frenzy going on over there. And I think that has really sucked the air out of the room for, Bitcoin. And I think that will come back. I think once that has worked its way through the system, and once they have, those traders are fickle, they move on, they'll come back into trading Bitcoin and what have you. But I think what we're seeing right now is that the attention has shifted over to the AI and chips. And eventually they'll come back. I mean, you look at Coinbase, I think their spot trading was down, let me see, I think it was down 31% in the second quarter versus the first quarter. So, clearly that retail-driven kind of, active traders and what have you have been a little muffled, a little quieter than normal.
Yeah. Running a Bitcoin treasury company yourself, Alex, obviously, this capital rotation has been a big story. Like Sean said, there's so many momentum trades and investment opportunities in the AI space. We've got IPOs coming from SpaceX here, and some of the AI companies probably in the not too distant future. As you're looking to attract more capital, and maybe you can talk about the big announcement that you had this past week, where you were able to secure some funding and expand what you guys are going to be doing. But how do you balance where the capital is moving while running a Bitcoin treasury company who's trying to accumulate as much Bitcoin as possible?
Yeah, one data point that I think is quite interesting is that there is 10x more interest in terms of number of investors today when it comes to digital credit compared with the number of investors that were interested in Bitcoin-backed equity back 1 year ago. 1 year ago, it was more capital, but in fewer hands. And this year, it's actually a 10x in terms of number of investors that are interested in the digital credit, so the Bitcoin-backed credit instrument. And that is quite interesting, actually, because you would think that in such a market for Bitcoin, the interest would be lower. And in fact, it is higher. And it's just that it's a different instrument, and that this is really scaling the Bitcoin treasury company level to a market that's much bigger than the equity side. And when you put that into perspective with the fact that the retail trading activity, especially American retail, is going to get back to Bitcoin after there is some rotation of profits from AI to the digital asset economy with Bitcoin as the cornerstone collateral. That makes for quite some growth into the Bitcoin treasury company sector. And when I say that, I mean companies that are able to actually use Bitcoin as collateral and as a way to generate more Bitcoin. And so that's really what I see. And in fact, the asymmetric information level, I have never seen that in the market because, and you can see that complete difference of understanding in the market. People think that Michael has been has had the obligation to sell Bitcoin, while it's completely different, and I've not like completely further from the truth. And you see a complete misunderstanding of the market that still thinks that Bitcoin treasury companies operate under the model of last year, while they are completely focused on the digital credit side and the Bitcoin as collateral for capital markets. So I think that's quite a difference. And then I think it's always good to take a step back and to look at the 200-week moving average, the 4 years moving average, and you see that this is going up and to the right as always in the past. And a good way to look at it as well is to see that the Bitcoin bottoms every 4 years just keep getting higher and higher. $200, $3,000, $15,000, and now $60,000. And wherever we land in the next 4 to 8 years, it's likely to be much higher than where we are today, be 50K, 40K, 30K, 60K, 90K. In my view, we are getting Bitcoin at a 90% discount and more right now. And it's really such an opportunity. I cannot believe we can buy Bitcoin at those levels. And it's such a great opportunity. And it's always the same. The market wants to buy things that are shiny and go fast and up and to the right in the short term. And Bitcoin right now is typically, well, at the opposite side of the trade. It's cheap, it's accessible, and it's in a trajectory that only experts can see. And you have such a robust asset compared with the level of competition that you see in AI is something I've not seen before as well. Like from one day to another, a 1 trillion potential market cap of an AI company can go to zero because you have some competitor that came in with some new innovation from such a new LLM and so on. And so I much prefer to be sitting on Bitcoin than some software right now, frankly. So, and I think that all of those profits will come back to Bitcoin in time, because that's the scarcest asset on earth, and it will collect those profits over time as well. So, really a great time to be building on Bitcoin and to be adding more convexity to the upside for with Bitcoin treasury companies.
Yeah. Sean, I'll come back to you. Like, how do you think about, the opportunity when Bitcoin's price is, I would say, down, testing that 200-week moving average? Is this an opportunity for, BSTR to, if you've got some dry powder to stack some more Bitcoin, and maybe you can kind of give our audience and myself an update on, what is the goal of BSTR? Where are you guys at with your, your journey with your listing through the SPAC?
Yeah, for sure. So we have filed our public S-4 with the SEC. So I think it's you'll see BSTR go to a de-SPACing process probably towards the end of June. That's kind of the window I would expect. And then that once it becomes a public company, once the shareholders approve that merger with CEPO, we then would come in with 25,000 Bitcoin from the founding team, 5,000 from a Bitcoin in kind equity pipe, actually similar to what Alexandre did, his group there with the Bitcoin pipe. We think that's a really cool, innovative structure. And then we have different capital markets notes that we were able to raise. So we did a common equity pipe for 400 million. We did a convertible note that had a 1% coupon that was 575 million face value. We have a preferred equity, 7% coupon with a 15% discount. So that was a 300 million face, but about 255 net. And then there's, of course, the SPAC equity as well. And of course, that's subject to redemptions from investors. So we'll have to see how that plays through, but we're not anticipating a lot of redemptions there. So when you add all that up, there's quite a bit of fiat that will be coming into play for BSTR to convert into Bitcoin. So from our perspective, having a lower Bitcoin price is extremely attractive because, like what Alexandre was saying, we really have that longer horizon, and we really do think that most investors should really try to think about Bitcoin with a longer horizon. When I was trying to get this into the pension funds, I did Santa Clara. Santa Clara was the first U.S. pension fund to own Bitcoin, and we started that process in 2019, and we were pitching it as this was like a 10-year plus hold, and we ended up getting it on the balance sheet in 2021 at 17,000. When we were originally pitching it, it was 7,000. And it was funny because everybody's always like, "Oh my God, we're way too late." When it was $7,000 a Bitcoin, it's like, "Oh, we're late to the show. Like, what are we doing?" And then it's 17,000. Like, "Oh man, we really missed it now." And but I think it still has a low correlation to other assets. It still has really fat right tails. And I wonder if I can pull up some other charts. We can come back to them in a bit. But I have some great charts that kind of illustrate this. On that. And, I think from BSTR's perspective, we're kind of trying to be an actively managed Bitcoin treasury. So there's certain strategies that I think are pretty, well known and understood. Things like covered options writing, basis trading, things of that nature, high frequency trading, market making and options, etc. There are other strategies that we're working on in what we call our little skunk works group that are not as well understood. And so what we're trying to do is really kind of port some of our knowledge from 30 years of managing multi-billion-dollar portfolios into the Bitcoin ecosystem, because the Bitcoin ecosystem is still pretty inefficient. And there's still when you have that kind of inefficiency, when markets are less well understood, to Alexandre's point, there's a real informational asymmetry here. And so, working with, folks like Adam Back, you kind of have this interesting advantage when you show up at the table, because these guys really understand at a very deep level the technology, right? And then we bring the capital markets side from my background, having run hedge funds and what have you, and pension funds. And that's kind of our goal, is to really kind of say, okay, actually a lower Bitcoin price works really well for us. If we get out into the public markets in this zone, we would be ecstatic. Right. In fact, our biggest concern is that Bitcoin bombs before we get out, and then we're chasing it. That would be the worst case scenario for us. But I think right now the timing is looking relatively good. I don't want to jinx myself, so I'm going to knock on wood. But I think if we can get in here anywhere below 70, I think it's a gift, as Alexandre was saying. I can't believe we're actually have this opportunity to buy Bitcoin at these levels. But we're keeping our fingers crossed. Hopefully everything moves smoothly through the filing process, the shareholder vote process. We convert in, we get that Bitcoin on the balance sheet, and we start putting it actively to work. That's the mission for Blockstream. And I'll pull up a couple slides, but we can go on to your next one. I'll come back. I'll get those already.
Yeah, just one question on that before you do, Sean. So was the timing around this strategic from your end, to be able to try to capture the price action?
I wish I could say that it was all strategic and that we were, this smart. Sometimes it's better to be lucky than smart. The timing is really subject to the SEC, to be very honest. It just is kind of the timing that's worked out with the SEC based on our filings and what have you. But yeah, no, it's not wasn't necessarily like a planned thing where we're like, okay, we're gonna do this, and get this out there at this time.
Cool. Yeah, yeah. That's cool color, and we'll come back to you with some of those charts. We can break it
Yeah.
down. Alex, I'd like to talk to you. Right now, the price of STRC is getting tested a little bit. It's down 3% off par with, about looks like 8, 9, maybe 10 trading days until ex dividend on that product. Is this just a function of Bitcoin's price, do you think, where we're seeing the price getting tested, or is there something more? Is the market really like, they saw Sailors sell a 32 Bitcoin, which is, obviously just a total drop in the bucket of a stack, and it was completely telegraphed. Is the market actually responding disfavorably to that, or is this just noise that's correlated with Bitcoin's price?
Well, first of all, I would like to remind that as any financial product, we talk a lot about all of these Bitcoin Treasury company shares and digital credit products and so on. We'd like to remind that as any financial product, there are risks. That's an obvious thing to say, but I think that's important to remind. The second aspect, because I've seen a lot of commentary online that digital credit would not be contributing to Bitcoin adoption and that Bitcoin treasury companies, I've seen some colorful words about Bitcoin treasury company, and it's a bit sad to see because digital credit is really not competing with Bitcoin. It is additive to Bitcoin. It is serving Bitcoin, in my view. It is providing a form of exposure to stripped away Bitcoin from volatility, from certain part of volatility. And Bitcoin has, a market that's about 3% of global assets, which is big, the direct commodity access. Bitcoin is completely irreplaceable. It's sovereign capital. And if you want sovereign capital, you buy Bitcoin. And if you want amplified leverage Bitcoin, you have Bitcoin treasury companies that are specialized in adding more Bitcoin per share. And if you want 2-digit performance potential with less than 3% potential volatility, and sometimes it can be a bit more, sometimes it can be a bit less. Well, here you have digital credit. And the S&P 500 is 10 to 15% performance annualized. Digital credit is literally 10 to 15% annualized as a potential. The S&P low range of volatility is 2 to 3%. And so STRC, even at those levels, is still much better than the S&P as a whole, because the S&P, I speak under Shen control here, but would likely have more than 2% or more than 3% annualized vol. Maybe the low range has 2 to 3, but STRC is almost the same performance as the high range of the S&P and almost the same volatility as the low range of the S&P. And so the STRC as it is today is much better, in fact, than the S&P because it's fully transparent. You can analyze the risk in real time. You can monitor it. And on top of that, I've seen some commentary that STRC should increase the yield because SATA has a higher yield and because it's important to stay at par and so on. And of course, that's important and that's under Strategies sovereignty to decide the next steps. I think the team is also evaluating the long-term implications of all decisions. And it is the rise and success of SATA and Strive is also the success of Strategy and STRC there, because then you have an industry, you have a sector, you have a benchmark, and that's also something that will benefit a lot STRC. And the fact that Bitcoin can drop from 120 plus K to 65K or so, and having STRC at 97, I think it is quite a statement because that's 3% from par, with Bitcoin at minus 50, 60%. And so I think the commentary I have is this is showing the strength of STRC and that product. And I think also the product is very young. We think that this is huge volumes because we say, of course, we see like 300 million, 700 million, 1 billion volume in certain days. And of course, in Bitcoin lands, in digital credit lands, that's a lot. And that's a massive success, and it's showing the power of digital credit and so on. But in traditional capital markets, this is still very the birth of an instrument. And so I think that in 5 years from now, we will be saying like, why STRC has dropped from 100 to 99.99. Why is that the case? So I think the product is young but extremely successful, and that strategy has been innovating all along, and that they will adjust as necessary, as they deem necessary. But the only thing I see there is opportunity. People have the opportunity to buy STRC $2-3 from par, and you see the market also starting to react, and they might increase the rate or not, but what I see is also they are letting the market form price and form the trajectory of the product. And what I see is as well that you have now an industry forming, and when we are in the roadshows, nobody is mentioning, of course, discussions with investors. Nobody is saying like, why is STRC at $3 from par? People are asking us why do we not have yet a product in the market, and so we are focused on delivering that for Europe, and it's crazy to have the opportunity as well to be working on that right now, and that there is not that much people already even aware of the existence of digital credit. So in my view, being $3 from par with Bitcoin down minus 50 to 60% is just showing the pure strength of the product, and showing the perspective and potential growth of that asset category over the next years.
Yeah, I would add to that. I mean, it's almost like if you think about high yield bonds and junk bonds when they emerged on the scene in the 70s and then kind of got some momentum in the 80s. It's kind of, I think, kind of similar with Bitcoin credit. It's, again, not super well understood by the institutional investor class or even the retail investor class. I think there are some institutions that are now getting involved that do understand the mispricing. But if you think back to, Braddock Hickman's original work on Fallen Angels, it's the name of the book, on high yield, which was published in, I think, the 1950s. And this is the one that Michael Milken read that really inspired him to get into the high yield bond business. The basic premise was that you were being overcompensated from a risk standpoint in terms of the risk premium that you were collecting versus the actual risk that you were embracing. And I think that's kind of what we're seeing with Bitcoin credit. People don't understand it, so it's not really priced efficiently. And I think hats off to Michael Saylor and the team at Strive for pushing forward here in this space. They're trying to socialize those structures with SATA and Stretch. And I think that to Alexandre's point, you could have many different issuers of these types of securities, just like you have many different issuers of junk bonds or high yield bonds, right? You could have, eventually you may have 25, 30 different issuers of these types of instruments, and then it becomes this really investable asset class for institutional investors, because now they have the scale and the size. To Alexandre's point, that $1 billion or $2 billion a day seems like a tremendous amount of volume. That's like one trade at PIMCO, right? You're clipping 1 billion treasuries in one trade, and you're moving the market maybe a bip, if that. You can do it in swaps for half a bip, right? So I think our perspective is shaped by our experience, and when the institutional big boys arrive, the game changes, right? And you start getting much different levels of volume, much different levels. There's going to be better price discovery. Markets are going to get more efficient. So my take is you make hay while there's hay to be made. And right now, this market is priced very cheap for investors to consider. And of course, to Alexandre's point, you have to do your homework, you have to do your research, you have to talk to your financial advisor and figure out what is the right amount of these types of securities to have in a portfolio. It's certainly not like, one of these things where you want to over allocate to a new asset class. Like, you want to be responsible about it and think about where it fits into the portfolio. But if it, we're seeing Morgan Stanley is coming online with pro Bitcoin outlook. We're seeing Charles Schwab coming online. We've seen, all these different banks that are now showing up to the party. And I think maybe I'll show you a couple of charts that we use on our road shows that we use to kind of highlight why we think, Bitcoin should be included in a portfolio. And these are dated charts because these are ones that we have that have been registered with the SEC. So they're a little out of date for the audience, but they'll give you the general concepts and themes. So let me just share that real quick if we can. Okay, so this is this first chart is really just kind of going through, to Alexandre's point, the returns on Bitcoin versus other asset classes. And we've probably all seen this chart. And, of course, the green is what jumps out here, right? The annual compounded annualized return, which this is as of January 31, 26. So it's a little dated, as I said, but this is one that we filed so I can reference it. The standard deviation is what scares everybody off, right? This is the problem we had with the pensions. Like, oh my God, how do we, sit through a drawdown like this? But when you look at, the Sharpe ratio and the Sortino ratio, and remember now the Sharpe ratio looks at total volatility. So it includes the upside vol, which in the case of Bitcoin can be rather substantial. Sortino ratio actually is only taking into account the risk, the downside vol. And so when you look at this on a Sortino ratio basis, it blows everything else out of the water. It's night and day. So, you can make a strong case for why you would consider adding Bitcoin into a portfolio. When I recommended it to the pension funds in 2019, we said 1 to 3%. If we could get 1 to 3% in the pension fund, this could wipe out unfunded liabilities for this pension. Now, this next chart really illustrates that fat right tail that we were talking about. Okay, and so the orange being the Bitcoin, you could see, where we have this just outlier high upside months on return versus say the S&P and other asset classes. And so that is like when you're baking a cake, like, and I compare making a portfolio to baking a cake. You need a little sugar, you need a little butter, you need a little flour, you need a little baking soda, a little salt. And when you put it all together, you get this beautiful cake. Well, having the fat right tail is one of those key ingredients that can really make for a beautiful cake. And that's why we really, try to emphasize that with the institutional investors. Now, as Bitcoin's price has gone up over time, the volatility has been coming down. And we've seen this on this most recent pullback. So I think that, what we saw in historical volatility, that it's only improving. It's getting, as it becomes more broadly distributed and broadly held, and as the market cap of Bitcoin increases, we've seen a kind of steady decline in the downside vol. So I think that's another important piece to take into consideration. So when you think about correlation, you think about the volatility and how that fits into a portfolio. When you look at your Sortino ratios, it all becomes quite compelling. And then the age-old question we always used to get, in 2019, Bitcoin was at 7,000 when we recommended 1 to 3% allocation, and everybody's like, oh my God, we're way too late. We're too late to the party. Like, it's gone. It was 1,000 not that long ago. Then when we got in there, we got in at 17,000, and everybody's like, oh my God, we're really paying up. We probably just top ticked the market. Well, when you look at Bitcoin relative to other asset classes, it's still just a tiny little dot, and, I think if we kind of keep that in perspective, if you can play the long game and have a long horizon, you really have a tremendous tailwind at your back. And we could talk about the debasement of different currencies and what have you, what's happening there. But I think most of the viewers probably know and understand that's one of the main drivers of Bitcoin, right? That limited supply. So if we go back up, let me go back up here. This is kind of how we're framing it with the Bitcoin Standard Treasury Company. So, we think that there's a tremendous arbitrage between where capital markets, where you can raise money in the fiat capital markets. We did a convertible note at 1%, we did a preferred equity at 7% with a discount yielding about 12. You can raise that now if you believe that Bitcoin will continue to outperform and compound somewhere north of those levels, then there's an arbitrage to be had. And so we're obviously Bitcoin maximalist and believe that Bitcoin is, going to have a compound above the level we're issuing securities. You take that fiat, you drop it into the company. You want to maintain a dollar reserve, similar to what Sailor is doing. With you want to have a strong dollar reserve to pay your interest bills, pay your obligations, run your company. We figure that should be around 1.5 to 2 on the current ratio. That would give us basically 1.5 to 2 years of coverage of our expenses. Then you convert the balance into Bitcoin. The Bitcoin then is dropped into what we call our alpha engine. And this is really just going back to old school classical portfolio construction, where we want to have different strategies. So it could be, on yield strategies, could be our covered options writing, could be our basis trading, and you want to have a core manager, and you want to have some satellite managers. And then what we do is we use SMAs so that we have control over those accounts and total visibility. And then you come up here to alpha strategies. That could be like a high frequency trader or inter-exchange arbitrage. But you want to have different lanes that are different alpha generators. Of course, everything's going to be correlated to Bitcoin big picture, but we're trying to build kind of a robust engine within the Bitcoin ecosystem. And then those profits drop into our bucket, and we increase our Bitcoin basis. Some of those strategies are Bitcoin basis native. Other strategies will generate fiat income that needs to be converted into Bitcoin. And then going back to kind of a high level, we're looking at our company is really all about trying to build a Berkshire Hathaway 2.0 and really trying to use Bitcoin as the asset instead of using stocks and bonds as the asset, and putting the Bitcoin to work in the marketplace. But also the idea that we could eventually purchase wholly owned subsidiaries. So there are other companies within the Bitcoin ecosystem that we think are finding product market fit, that need an infusion of capital and could benefit from our lower cost of capital. So if you're a private Bitcoin company and you're looking to step on the gas, if you're trying to access private credit markets, you might be paying 12 to 14% interest rates if you can access them at all, right? With our company, we have a much lower blended cost of capital. And it also gives founders an opportunity to access liquidity through the public shares. And we can create a great alignment with those founders. So very similar to what Berkshire Hathaway has done with having wholly owned subsidiaries, although they're in the traditional TradFi world, right? Coal companies, gas companies, utilities, the trains that move those products. Well, we would like to be vertically integrated into the Bitcoin ecosystem. And, we want to be a Bitcoin pure play with Bitcoin sub-operating companies that are wholly owned but independently run. And we think that's kind of like a different approach to trying to build kind of a Bitcoin treasury that will really be emphasizing utilizing Bitcoin as an asset and trying to generate a return on that asset. That's really kind of the mission that we're pursuing. It was super interesting. I went to Markel, the Markel shareholder meeting. I don't know if you guys follow them. Markel is a smaller insurance holding company similar to Berkshire Hathaway. And a couple of weeks ago, they had their annual meeting in Virginia. And it was funny. I was sitting at the lunch tables, and people were talking about Bitcoin. And this is we're talking deep value investors. These guys are Berkshire accolades, and I think I mentioned this to you, Alexandre. We've gone to the Omaha to the Berkshire Hathaway meetings for years, and you would hear people talking about Bitcoin, which was just kind of really interesting that they have this barbell approach. They have kind of their conservative TradFi exposure, and then they have their Bitcoin, kind of the future of tech in the Bitcoin ecosystem. And I heard, I think, probably 3 different conversations at Markel with probably 1,000 different shareholders that were there, totally random, that were talking about, Bitcoin, talking about Stretch in particular, and how they were looking at it for their portfolio. So I think we're getting to a point where we're I think right now, to what we were saying earlier, the focus is on AI and chips and what have you. But that will run its course, and it will come, people will come back to the Bitcoin ecosystem. And I think when they do, I think we'll be really well positioned for the next leg up in Bitcoin. And I think we'll be able to attract the kind of investors also. We were broadening the participation with these more traditional value investors as well. So when you combine that fast money retail folks that are right now all focused on AI as a catalyst, I think the value investors are going to be handsomely rewarded because they're already in and they're getting in and they're discovering it. And then that will become a really strong shareholder base.
And Shen, actually, I have a question for you. A lot of the banks and institutions typically say that a cycle of investment into the AI industry is kind of unprecedented.
Yeah.
So wanted to know any precedent that you think of when you think of the current macro situation in terms of the Fed, in terms of the macroeconomic landscape with all of those capex investment into infrastructure and those energy shortages and Middle East conflict. Like, are there precedents that institutions have in mind, or that that might be good precedents of analysis for that when it comes to monetary creation as well and this kind of elements?
Yeah, I mean that's definitely there's a lot of chatter right now, and I sit in the Silicon Valley here. So I went to school in the Silicon Valley. I went to Stanford Business School here, and been in the Silicon Valley since the mid '80s. And so there's definitely kind of deja vu's of what was happening with the dot-com run up in the 2000s. Now I will say, some people say that the AI boom is different because these companies are making money, but I would also say that some of it is somewhat circular flows, right? We have credit guarantees being issued by the chip makers for the purchases of the chips and what have you. So there may be similarities here. I think that it is getting to the point. So we've exceeded the concentration level of the top tech companies in the indexes. So I think right now we're at 31.5 trillion versus the total market cap of 44.3 trillion of the top 25 technology stocks. That during the dot-com crisis peaked at 37%. So we're already above that. So I would say that I do, being in the Silicon Valley, you can't help but be pretty optimistic about the productivity increases that are going to result from AI, but it might be fully baked into the cake. It might be fully priced into the cake at this point. And so I look at Bitcoin as being a leading indicator, and it has been an effective leading indicator to the equity markets for quite a while. And the fact that Bitcoin has corrected 50% would not surprise me that we see something similar with the equity indexes in the next 18 to 24 months. I think there's a lag there, but that would not surprise me. With the Middle East and the Straits of Hormuz, I think that I think it's very interesting. I lived in Texas as a young kid, and people down there, we had a lot of wildcatters and oilmen, and people always said 60 to 90 bucks, right? Is kind of like where the economy functions well with oil. You get down, in today's market, inflation adjusted 60 to 90. You get below 60, and the oil companies start pulling back. You get above 90, and inflation starts really starting to tear because oil's in everything, right? It's in our clothing, our cars, everything. So I think with the Straits of Hormuz, I saw that the ExxonMobil said that we're a few more weeks away from actually getting to where we're going to start to feel the tightness of supplies of existing oil reserves. So that's something definitely to watch carefully and closely. I saw there were missiles going back and forth again overnight. It's a tricky one. That said, I think also kind of to the same point of what we were talking about earlier with the AI investors having short attention spans and kind of chasing shiny objects and what have you. I think they've kind of moved on from the oil story. They moved on from the Straits of Hormuz story. We're not seeing the impact that we might anticipate that we normally would see given the turmoil in the region. So I think that one's a little trickier to model out because I would have thought that we'd already have higher energy prices than where we are. But I would watch that that $100 zone. If we start trading above and consolidating above 100, that I would think would put a lot of pressure on equity markets for correction. On the interest rate side and inflation, with pushing 4% inflation now on our most recent rate CPI numbers at 3.8 or 9 on the last one. Inflation. The U.S. likes to target 2. We're coming in twice that run rate. That definitely is challenging. Another great reason to put Bitcoin in the portfolio because you're losing 4% of your purchasing power. Right now with the inflation rate where it is. You've lost already over 25% of your purchasing power since the pandemic, right, with the dollar. So again, I think these are all very favorable tailwinds for the Bitcoin ecosystem. I do think, I've been watching gold versus Bitcoin, and that spread has been coming in a little bit. The 12 is a big support zone there. I think we're right now around 15-ish on that ratio for gold to Bitcoin. So I think that's another one that's been, gold has recently overtaken the dollar as the primary reserve asset of central banks. So that's a big thing. I think, our sovereign wealth friends out in the Middle East have probably hit the pause button a little bit on Bitcoin acquisition. So that support may have faded from the market temporarily, but I wouldn't be surprised if that comes back once things settle down in the Middle East and they can, they probably right now need to reserve for other obligations, if you will. But I think they'll be back into the market. We've seen a lot of interest out of that region. So I think from a macro standpoint, if we look at the U.S. as adding $1 trillion a quarter in debt to the deficit, you look at the Japanese yen looks like it's about ready to break to another level. We're looking like we might be going to 170 on the yen. We know the playbook there on the printing and monetary presses. I don't know, Alexandre, you're probably in a better position to speak to Europe, but it just seems like all these central banks around the globe are, making the case stronger and stronger for Bitcoin with their actions.
Yes,
You know,
definitely.
yeah, yeah. And I'm kind of an Austrian economics, guy. So like to me, this is like, I can't believe everybody else doesn't see it. It's like,
Well,
You're in good company with us here, Sean, on
yeah,
that.
it's a big advantage.
Yeah.
yeah. And I think
I
it
mean,
is, it's a temporary mispricing. I think like to your guys' point earlier, like, God, this is kind of a gift down here, right? I mean, you got to do your homework. You got to have a long horizon. You got a dollar cost average in. Be careful, but the fact that we have the opportunity to buy Bitcoin below 70,000 is exciting.
yeah. I mean,
Yes.
we're coming close to one trillion market cap. At 50K probably. And that just seems,
Yeah,
g- given the inflows from the ETFs over the last few years, given the persistent bid from treasuries led by strategy. I mean, that's billions and billions of dollars. A $1 trillion market cap it seems laughable at this point, and what an opportunity to be close to that.
yeah, yeah. Agree. I mean, we have tech companies in the Bay Area that have market caps that are bigger than that, right? As individual companies, and so I think it's still very early days for Bitcoin. It's a teenager. It's growing up. People are, we're seeing, the traditional TradFi people that used to poo-poo on Bitcoin are now coming to the table. Like, gee
Mhm.
whiz, maybe this actually does make sense. We should be looking at it. So I'm very bullish and optimistic on Bitcoin's long-term future. In between, it's volatile. You got to be, you got to size it right in your portfolio.
Yeah, good stuff, Sean. do you think, if there is a correction in equities, because they've been overheated, is that when you think some of the rotation happens into Bitcoin, or is it going to take some time for that to flow into Bitcoin?
Yeah, I think markets come down much faster than they go up, right? And so I think you can definitely catch people off guard in these markets. And I think that the rotation for the institutional folks could lead, right? And I think that they are the institutional folks that I talk to do follow and do look at Bitcoin as a leader to the general broader risk on risk off trades. And I think that kind of coincided with all the easy access to the fiat on and off ramps with Block and all these other apps. But I think that you will see that rotation come back in, particularly like I was mentioning. I mean, like with the Markel meeting, was very interesting for me to hear the value investors were sniffing around Bitcoin and on the break. Right, they're all like they got their notepads out and they're looking at Bitcoin and they're like, God, it looks like it's gotten cheap, and we should be spending time on it. And how much do we put into our portfolio? And and I kept my mouth shut. I was like, I just wanted to listen and hear. I didn't want to go into, oh yeah, like I mean, here's what I think about Bitcoin and why you should have it in there. I really wanted to hear what they thought. And so I think there will be a rotation back into Bitcoin. And I think you'll also potentially see that gold rotation as well. Like gold has certainly really benefited, from I think the Chinese buying, other sovereigns buying, what have you. And there's a whole nother case we could go into about, the strategic flows of why the Chinese may be buying the gold to undermine the dollar and what have you, and trying to do the yuan petrodollar and what have you. So that's a whole nother thing. But I think that you could actually see flows back out of gold and into Bitcoin. I think you could see it, rotations out of different technology sectors back into Bitcoin. Wouldn't surprise me at all to see that occur.
Good stuff. Well, thanks so much for joining Alexandre and me today, Sean. Make sure you give him a follow and check out what they're doing at BSTR. I know the team here at BitcoinTreasuries.net is really, really excited to see the moves that you guys make in capital markets and to cover, every step of the road there. I think what you and Adam have planned is really exciting, and thanks for giving us kind of like the high-level overview today. And Alexandre, I'm going to give you the last word here today. You always leave us on a bullish note, so let's go.
I think it's the time to be patient because typically, as Shen said, it goes down faster than it goes back up. And at the same time, it seems like we are entering the bottoming phase. And this is great news as well. And I think this is historically where Bitcoin has done 8 to 90x returns. Those levels after Bitcoin has gone down from the all-time highs by 50 to 70, 80%. And this is really a great time to be spending time on learning more about Bitcoin, learning more about Bitcoin capital markets. And I would like to say a message to long-time Bitcoiners that are still a bit skeptic about Bitcoin treasury companies. Is that yes, there are a lot of risks, but we do work for Bitcoin and we do work for the adoption of Bitcoin. And a lot of people actually are working for the adoption of Bitcoin today. And Bitcoin is a network, and that network is growing by the day in terms of the people putting in the hard work every day for the message to grow over time and over the world. And this is growing. And as more and more people are contributing to the inclusion of Bitcoin into capital markets, Bitcoin is going to basically grow from the trillion to 2 trillion market cap towards the 30 trillion market cap of gold as a base case. And that's Bitcoin at $2-3 million a coin. And this is Bitcoin today at 60 to 70K Bitcoin. So take advantage of that opportunity. The best time to buy Bitcoin was yesterday, and the second best is today. At least to learn about it and about based on the risk management of everybody, of course. So I think that's really the thing there. To learn more, and thank you, Tyler, for putting up the show, and Shen for joining us today. It was amazing.
Great. Thanks so much,
And for
guys.
everybody listening there.
Take care.
Bye bye.